Hello everyone. Our group's topic is investment and savings preferences of Chinese consumers across generational and risk tolerance view. It's our content. The first part is background. For investment and savings preferences of Chinese consumers, in recent years, the rapid development of China's economy and the increase in per capita disposable income has led Chinese consumers to exhibit increasingly diversified and complex trends in investment and savings. The investment and savings preferences and risk tolerance of Chinese consumers vary significantly based on income level, age, educational background, and regional differences. The next page is traditional saving habits and model investment channels. In China, traditional saving habits remain deeply ingrained, especially among the older generation, with bank deposits still being the primary means of wealth accumulation. However, as the financial markets mature and diversify, more and more young consumers are beginning to explore other investment channels, such as stock, funds, real estate, and insurance. The development of internet finance, such as P2P lending and online wealth management products, has particularly made investment channels more convenient and diversified.
Now, let me introduce the research methods. In order to understand the investment and saving preferences of Chinese consumers of different age groups and their risk tolerance, we collected primary data through a comprehensive and well-structured questionnaire. The questionnaire was distributed online via popular Chinese social media platforms, such as WeChat and QQ, to cover a diverse and representative sample. And the questionnaire included participants from Gen Z to seniors to ensure a cross-generational analysis. Our sampling method was random sampling. It ensured that our sample accurately represented the different generations. The survey instrument was carefully crafted to capture relevant data while being concise and easy to understand. It consists of demographic questions, investment preferences, and risk tolerance assessments. The questionnaire primarily used a 7-point Likert scale to quantify respondents' preference for different types of investments as well as their risk-taking ability. To ensure the survey's effectiveness, we focused on creating clear and brief questions, avoiding any jargon or complex language that might confuse respondents. To enhance response accuracy, we implemented robust data validation checks in the questionnaire. This include mandatory fields to ensure all necessary information was provided, and logical consistency checks to verify attentive and coherent responses.
Okay, so for findings from the survey, it shows that the most of people take the survey are born after 1980s, and about 78% of people are married. 90% of people take the survey that have educational level lower than postgraduate, and about 73% of people have household net worth up to about 500,000 RMB, and about 75% of people expect to start withdrawing their money from their savings in at most 10 years. So from the demographic questions, the result shows that all questions are slightly above average of 3.5, which is 3.7 to 4.3. It shows that people in China's attitude about investment and the ability of risk tolerance is slightly above neutral. The result from the 1 to 7 scale demographics questions shows that the willingness of Chinese people to invest half of their investable assets in different areas with a risk that is above moderate. And the results show that Chinese people are willing to invest in different targets, including gold, insurance, stock market, and fund. And the willingness of the investment is above neutral.
According to research, people have a high awareness of the investment potential of gold, and financial institutions should develop gold-backed investment products, and people tend to buy insurance. Institutions can design comprehensive insurance plans with attractive benefits. In addition to this, people have moderate confidence in stock investments, but the willingness to make large investments is low. So institutions can offer diversified, low-risk stock investment options to build consumer confidence. Besides, people have mixed information about real estate investment. It is recommended to provide market analysis and future forecasts to help consumers make informed decisions. Based on the findings, high market volatility can undermine consumer confidence and lead to reduced investment. Financial advisory services can help consumers cope with volatile markets and adjust their investment strategies. Demographic changes can significantly affect investment and saving behavior. Demographic research is conducted regularly to gain insight into demographic trends and consumer behavior. New financial regulations may affect the operations of financial institutions and the attractiveness of certain investment products. Through proactive monitoring, a dedicated team can be maintained to monitor regulatory developments and assess their potential impact. A recession could lead to higher defaults on loans and credit products, spreading the word about the importance of long-term financial planning can make the benefits of continuing to invest even in a downturn.
Okay, next I will do the summary for this presentation. The study looks into Chinese consumer savings and investment preference in the face of the country's fast economic growth and rising per capita disposable income. We looked at how these tendencies have evolved and grown more complicated as a result of several influences, including regional variations, age, income levels, and educational backgrounds. The study emphasizes both conventional savings and practice, older generations preferring bank deposits, and contemporary investing avenues. Younger customers are investigating equity funds, real estate, and insurance in addition to the expansion of online banking. Random sampling was used to ensure representation of different age groups among the survey participants, but who were recruited using Chinese social media platforms such as WeChat and QQ to determine investigating preference. Demographic data including age, gender, marital status, degree of education, and financial status was gathered. Financial institutions should provide comprehensive insurance plans, give low-risk, diversified stock investing options, together with financial literacy initiatives, and offer gold-backed goods and educational materials in order to offset problems. In order to maintain stability during economic downturns, institutions need to stay up to date on regulatory development, create robust financial products, and conduct regular surveys to monitor changes in client preference and demographic.